Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Woolhouse. So the whole world is just going batshit crazy right now. Pardon my French, but it just seems like everything is upside down. And I don't think it's going to get much better. I think that as we continue into the election, it's going to get even more insane. And so looking at this insanity from the perspective of economics, global economics, and monetary policy, what's happening with the banks, there's also some huge things that are happening. But one place where there are some major changes going on is China. So right now in China, what it looks like is that there are the beginnings of a pretty serious banking crisis. And you could even say that a banking collapse is beginning in China. And just the past couple of weeks, there were 40 different rural banks in China that were managing trillions of dollars worth of assets that had to be absorbed by a few larger, state banks. So this is big because this is banks that, even the information we'll be showing you that admittedly had up to 40% of their loans were non-performing, right? Meaning that 40% of the loans that they should be earning money on, people aren't paying them, right? These are toxic assets. So those toxic assets of these small banks get swallowed up by the big banks. And so what happens when a big bank swallows up a bunch of toxic assets? Well, they taint the bigger banks, and this is something that spells disaster. So joining us today is my good friend, Dr. Kirk Elliott, and we'll be diving into what the banking crisis in China means, the bigger picture, how it affects the U.S. dollar, what's happening with the U.S. treasuries that China is holding, and everything related to that. So folks, please enjoy this interview with Dr. Kirk Elliott. Kirk, always great to have you on, man. Thank you for being with us today.
Oh, it's so good to be with you and speak truth and hope in this world where it seemed like everything was falling apart over the weekend. Literally, it was a wild weekend.
And the fact that it's still wild after the previous weekend, right? With the whole Trump shooting. And I just feel like that this is going to be the new normal until we get through this election, where like every week there's going to be multiple massive stories breaking. And I think that it'll just increase in frequency as we approach the election. This is just the time of the year. And if this is a preview for what's to come, it's going to be wild.
I mean, I agree. I mean, so last weekend, assassination attempt on Trump. It's like, what a bad weekend, right? And then over the last 3 days, you had the America pretty much shut down. Banks weren't working. Hospitals couldn't get their software, so people had to stop surgeries. Airlines were grounded. Biden drops out. China's dumping treasuries. Israel decided to bomb the living daylights out of Yemen, which is going to have implications. Like all of those would be stories for like a year. Those would be the highlight stories for a year. And they all happened in 72 hours. It's like, oh my goodness. It seems like there is this acceleration of everything happening right now. And it is becoming harder to tiptoe through the minefield of an economy to find the good in the midst of the bad. But Seth, there is good to be found, at least financially, right? And I think all this bad stuff happening, there's good to be found politically as well, as people are starting to wake up. Crisis always does that. Crisis always wakes people up to question everything. Are we being told the truth? Is everything that we've been experiencing real? Is there a better way, right? So I do see hope in all of this, but there's no doubt it's dark right now, economically, politically, geopolitically. I mean, it's a lot of bad stuff happening.
You're right. There really is. There really is. And I agree that there is hope, right? Because I think that it seems that there's evil everywhere, but I think the evil's in a lot of ways always been everywhere. It's been hiding, and now we're seeing it. So it feels like, it's like the enemy's everywhere, but I think it's always been there, and we're seeing it now, which is actually a good thing that we're seeing it. So jumping into China, because there's some really big and important news, but also kind of frightening, unfortunate news about what's happening in China. It absolutely affects us. So this is a story that I've been seeing over the past week or so, really, really picking up steam, that these 40 banks shut down in Vanishing Act absorbed into larger lenders as the economy teeters in China. So we've talked a lot about what it means when there's bank runs, when banks are shut down, when banks get absorbed, what that looks like, right, through the lens of America. But I'm going to read the first few paragraphs of this because this really helps establish a lot of our discussion today, especially why what's happening economically in China affects the entire world. So this article says, banks are collapsing at an unprecedented rate in China due to a major downturn in the country's property market, poor risk controls, and other issues. In the week ending on June 24th, 40 smaller banks were sucked up by larger institutions, a vanishing act incomparable even to the savings and loan crisis of the 80s and 90s, reported The Economist. So it says the report tracks roughly 3,800 lenders in rural China. They hold a whopping 7.5 trillion in assets, or 13% of the entire banking system. And these, almost 4,000 lenders that are starting to bleed out due to an overstock of bad loans. Some of them have admitted that as much as 40% of their portfolios are non-performing loans. It says 36 of the 40 failed institutions were all absorbed into one giant lender, Liaoning Rural Commercial Bank, which was set up by regulators in September to manage bad banks. According to The Economist, 5 similar institutions have been created in the last 10 months for the same purpose of absorbing small bad banks, which critics warn will always only lead to bigger, badder banks. It continues and says, at the same time, the Chinese economy has shown multiple signs of hitting a wall in the last year, including sharp downturns in residential construction and sales, consumer confidence, and consumer prices, combined with a declining population and soaring debt as a percentage of GDP. It says, but as China's economy struggles at the local level, its biggest banks continue to flourish, consolidating the fallen institutions while drastically expanding their market cap. So it continues, but I mean, this is really significant. I mean, China's economy is absolutely significant on the global stage. So, what do you make of this? Like, this is you could say that China is suffering a bank collapse crisis, right?
Yeah.
What do you make of it, Kirk?
Well, I think that they are. So let's put it into perspective of what happened in America last March, right? When Silicon Valley went down, and that created like this little contagion of banks failing, and Credit Suisse and First Republic and Signature Bank and Silvergate. There's five, right? And look at the mayhem that caused and the policies that came in, and those banks were bought out by larger institutions for the most part. And now what? You look at the bank in New York that bought Signature Bank. It's like, oh, now their asset sheets, their balance sheets and their assets are all bad. It's like, because when you drop a couple drops of poison into a perfectly clean cup of water, you taint the whole cup of water, right? So that's what's happening over there. But now, when you've got 40 banks failing, not 5, being gobbled up by a larger institution because of real estate madness, $7.5 trillion of assets that these smaller rural banks hold. Well, in America, you would always probably go to court and say, what? There's the these are monopolistic practices, right? You can't gobble up all these banks, right? And so, but in China, it's a communist nation, right? So consolidation it's normal to consolidate there. So, but this is a communist ideal. You eliminate competition, have only one, because there's power and control that comes with that. This is the danger that I see, even with central bank digital currency, right? Is consolidation of power, but digital, the ability to cut you off. So now that all of these rural banks are being gobbled up by one big bank in China, they can control all of that world, Chinese population that's rural, like 13% of their entire banking system, according to that article. I mean, this is all about power. It's not about necessarily bailing out a failed bank because they care. I think they're bailing out the failed banks because they want the power. They want to consolidate everything. But what caused that? What caused these rural banks to fail? It goes back to like Evergrande. the big Chinese real estate holding company that couldn't even afford to make their interest payments because they were so extreme, as they were building massive amounts of infrastructure, ghost cities, pretending to the world that they were actually robust, but it was all debt based. It was all debt. It's just money that they were taking from other countries, right? Is because they're an import. They don't have many imports. They export to the rest of the world, right? So they're taking other countries' money, building up their infrastructure, trying to build this Potemkin village, this house of cards. And now, when commercial real estate, rising interest rates globally has really impacted the ability for any of those people who couldn't afford things to begin with, now they really can't afford it. Well, so now you've got problems. And this is just the start. That was the last week in June, right? 40 banks failing in China. So what did I just describe? Banks running out of money, people not able to pay off their loans, commercial real estate, hitting the skids along with residential. It's like, Seth, I'm describing America too, right? They just beat us to the punch. It's the exact same scenario that's playing itself out all over the world because of too much debt, because of too much money printing, to fund things and to try to hide with the problem that governments don't have money, that they can't afford things. And when you have a printing press, you can mask that for a while. But we're at the point right now where the mask is being ripped off. And now everybody can see that the emperor has no clothes, right? Everyone can see that these economies were based on debt, other people's money, and that's not real growth. That has to be paid back, and they can't pay it back. Now, if you had economic growth from actual people spending money, right, of money that they earned, not going in debt, well, then that would be true growth of an economy. But we don't have that. Not even in America do we have that. We've got, student loans that are through the roof that the Biden administration decides, oh, let's just actually, forgive all of these because these kids can't pay it back. And then you got credit card debt that's $1 trillion now. That's the most ever. You've got commercial real estate. I just saw this article about commercial real estate in San Francisco. We're pushing half of all the commercial real estate in San Francisco is vacant. Half. So now they're trying to come up with policies that give companies tax breaks if they will take their people remote and bring them back into the city, because all of the storefronts, all the hotels and all of the restaurants and shopping in San Francisco, it's like gone. There's nobody working downtown. It's like a ghost town. Well, that's not much different than New York, which 1/3 of all the commercial real estate is vacant in Manhattan, 1/3. So you look at what's happening here in America, and we're thinking, holy smokes, 40 banks failing in China because of the same scenarios that's happening here. So to me, it's easy to connect the dots, sadly, and what's happening in China right now will happen here because it's the same fundamental forces. Assets coming down, inflation going up, cost of borrowing going up, people delinquent on their loans, ultimately default, banks go into trouble, be consolidated into larger banks. Now that's all about control. And that leads us to the easy step of people control with central bank digital currency. But to take one little step back, why is China now dumping US treasuries like at the greatest clip that we have ever seen in the history of the world, right? So,
folks, perhaps you'd agree with me when I say that over the past 5 years, the mainstream healthcare system's credibility has plummeted. Alternative healthcare systems that aren't beholden to medical consensus or big pharma are on the rise. Sweetamine is time-tested and proven to boost your life with better health. It's one of the leading products that helps with inflammation and daily aches and pains. Just because you get older, it doesn't mean that you have to feel old. And folks, did you know that most of the diseases that make people sick and die these days are rooted in chronic inflammation? oftentimes due to glycine deficiency. So, sweetamine is composed mainly of the amino acid glycine, the nutrient that the immune system uses to regulate inflammation. So, with once daily sweetamine, most people feel the reduction in pain after just a few days. So, I challenge you to the 12-day sweetamine challenge to fight inflammation and take control of your health today. So, folks, buy sweetamine online at sweetamine.com or call 855-GET-SWEET. That's 855-438-7933. And make sure you use promo code SETH, SETH, to get a nice discount on your purchase.
So you look at over the last 30 days, China's dumped $75 billion worth of US treasuries. Well, number one, they obviously need the money. So when you sell those, you're going to get money back. Number two, with all of the mayhem, as I try to think about why they're doing that, because isn't the US dollar stronger than the yuan? Not necessarily. I mean, it used to be, right? But if they get rid of these toxic assets, you always sell something because you think it's going to go down in value in the future and you want to lock in your profits. Or you sell something simply because you need money. Either one of those two options, why China's dumping them, is death to the dollar because they own so many of them. But $75 billion in the last month equates to close to 10% of their total holdings of the dollar, right? So they're getting rid of it at a rapid clip. But to me, there's a philosophical bent to this action. And that is, according to Putin, according to Xi, the BRICS nations, they want to de-dollarize the world. They want the BRICS nation currencies to actually be stronger and the dollar to be destroyed. Well, doing this is going to put so much excess supply of the dollar out there that there's not going to be enough buyers for it. So who is the buyer of last resort? The Fed. The Fed will probably buy all of these treasuries that are out there, but with what? The Fed doesn't have a bunch of cash laying around. Oh, or do they? I mean, they can print it, right? So when China dumps these US treasuries because they need money coming into China because they're obviously having a real estate meltdown and they've got banks that are failing, 40 of them in the last week of June. I mean, this is not small potatoes. They need money coming in. By doing that, you're going to diminish the value of the dollar. The Fed's going to buy it. They're going to print money out of thin air to do that. That's going to create more inflation. And therefore, ultimately, you are going to have rising interest rates as a result of that. China's using, kind of making lemonade out of lemons, right? Or beauty from an ashes moment. They're falling apart economically, but they own so many US treasuries that they can dump them. And if the dollar, Seth, diminishes enough, it makes the Chinese currency and the BRICS currencies look better. Right. So they're playing a wise chess game here, right? They're being smart about it in the midst of something that any other country, if they had that and they didn't have all those treasuries, they wouldn't be able to do the same thing that China's doing. But I think this does two things. Brings in money to China and it destroys the US dollar. And that's the net benefit to them. And all of this is a net negative to the United States. To think that these banks are the only banks in the world in China that own Chinese real estate. Big, massive international money center banks like JP Morgan, Bank of America, Citi, Wells Fargo, they all own Chinese real estate, right? And so this could have the dominoes start falling across the world, which you and I kind of predicted this a year ago when Evergrande failed, that this was going to spread like a contagion to financial institutions all over the world because China is the largest real estate market on the planet. And there's not just Chinese banks that own Chinese real estate. Western banks do too. And I think this is the beginning of a downward spiral for financial institutions.
Well, something also interesting that I'll pull up in this article where it's talking about capital flight as one of it, which is money leaving a country. So a quick background: I used to do a lot of business with China, and but more with people like Chinese citizens. So I used to be in the jewelry industry, and I would travel to Hong Kong and do these big high-end trade shows is, and I would sell to Chinese customers. So I'd have a lot of my client base were people coming out of China into Hong Kong to purchase, like high-end watches or large diamonds or these kinds of things. This is just the industry that one of the things I was doing previously. But what was interesting though is because you could see that they were doing it as a way of getting money out, right? And basically exchanging. So what they would do is these people would come up and they'd show up and they'd have like $100,000 in US cash, right, in Hong Kong. And they would then buy, like they'd convert that into, say, some diamonds or whatever, and they'd bring those back into China. But it was a way of getting cash out and then still having assets to bring back in. So there's all kinds of weird trades going on with that. But you could see though that there was this huge push to pull money out of China. And I remember that within a few years of Xi Jinping, taking back control, they had these anti-corruption campaigns, right? They called it the Tiger and Flies campaigns, where they were getting rid of the old regime, but they put really strict measures on capital flight and so we saw that the China business dropped significantly after that because they were frightened of all the money leaving China. And so, but what's interesting is I want to read this one paragraph here. So it's talking about how that the yuan had slumped. So it says, so if one had to guess what was going on, even though the yuan slumped in May, June, and July as the capital flight jumped to the highest level since the 2015 devaluation, the hit to the yuan would have been even bigger had China not liquidated a record amount of U.S. securities, while the People's Bank of China, which is China's central bank, was buying much more gold, while China's middle and upper classes were buying up Bitcoin. So that's interesting there, right? That having to do with, one of the highest months on record for capital flight, money leaving China, but then how the China's central bank was buying even more gold as their middle and upper classes were buying Bitcoin, right? Which is just an interesting tidbit to put into this. And what do you make of that?
So it's interesting. So the central bank is buying gold. Banks are buying gold. People are buying Bitcoin. Either one of those. Look at gold as an alternative currency. It's basically become a tier one asset in China, meaning it is the asset that's basically they view as the value behind the financial institutions, asset base. So they want gold. Gold is a tier one asset. Now Bitcoin, similar flight, right? It's getting out of the yuan, going into gold if you're a central banker or a banker, going into Bitcoin. It's anything out of their currency, right there. And people when you look at Bitcoin and gold, even though they're completely different, one is digital blockchain, one is tangible asset. The fundamentals of why people go into them, the two big fundamentals are both the same for both of them. Number one, they wanted to go into something that's private. Gold is a private transaction. Decentralized blockchain is private. So that's why people like Bitcoin and like gold, because of the privacy component of it. And think about it in terms of a communist country like China, they want away from Big Brother, right? So to me, that makes sense. And then secondly, people go into Bitcoin or gold because they view other asset categories as coming down, and there's massive growth in both of them. One very volatile. I mean, Bitcoin can go up 20% as quickly as it can come down 20% like that, right? Doesn't mean that it's not a good investment. It can be, or it can be a horrible investment, right? It just takes appropriate timing and understand the crypto markets to do something in that realm. A little bit too risky for my blood because I don't have time to sit behind a computer screen all day looking at all these things on cryptocurrency because there's literally tens of thousands of them. I mean, there's a lot of cryptocurrencies out there where gold is simple. To me, it's simple. The fundamental forces that cause it, unsustainable debt, inflationary pressures, political chaos, geopolitical conflict. We have all of that. So you allocate into that strength, right? So people in crypto and in gold want safety and they want growth. right? You can get growth in both, but I think ultimately you get financial safety in only in precious metals like gold and silver. I mean, look what happened with all of the computers being shut down in America over the weekend, right? It's like, well, what if you can't access anything, right? Like people couldn't access things over the weekend. Our internet was so slow as they probably went to backup servers that nothing would even load over the weekend. It was wild. So to think that digital assets are safe, not necessarily. They might be more private, but don't confuse the word safety with privacy because they're two different concepts, right? So gold offers safety and privacy, as does silver, safety and privacy. Cryptocurrency, not so much, but definitely both of those options are better than the yuan or any currency that's fiat-based currency printed at whim by a central government who wants to command and control everybody in their constituency. That's what normal, traditional banking assets are. And to put it a little bit into perspective, and I know that you've done expose on the great taking, right? Our assets in the bank aren't ours to begin with. Haven't been so since 2009 when we gave up ownership of our bank accounts to the financial institution and we become a beneficial owner, which means the bank actually owns our checking and savings accounts. And if they deem it necessary because we ask for it, we want to make a withdrawal, then we are the beneficiaries. They can grant that request and get us the money. But for all intents and purposes, they don't need to because we gave up ownership to them. That's what the amazing part about that book. That was I think one of the most brilliantly well done, well-researched things on banking that I've seen in my career. I thought that was a really great book because it showed the danger of the transfer of ownership that you see in times like we're living in. And I think that accelerates and gets worse.
Oh, I would say so. I want to bring up an article just because this is exactly what you're talking about. This is just from this morning on Zero Hedge. Central banks purchase gold to offset their own money destruction. There's a few things I want to read in here just to as we round out today's show, because so it's talking about inflation and how so inflation is slowly decreasing. It's like, okay, well, I'll wait till the groceries are back to what they were 3 years ago. It's not going to happen. So what it says though says this is why central banks need to give the impression of hawkishness and maintain rates or lower them cautiously. However, monetary policy is far from being restrictive. Is talking about the money supply growth picking up and a few other things. But what it mentions though says, as at the end of this article, the price of gold is $2,400 an ounce, up 16.5% between January and July 19th, 2024. In the same period, gold has performed better than S&P 500, the Stocks 600 in Europe, and the MSCI Global. In fact, over the past 5 years, gold has outperformed not only the European and global stock markets, but also the S&P 500, with only the NASDAQ surpassing the precious metal. It says this is a period of alleged recovery and strong expansion of the stock markets. On the one hand, the market is discounting the central bank's continued accommodative and expansionary policies, even possible high debt monetization, given the unsustainable deficits in the U.S. and developed countries. So what they're continuing here is saying is that is the market assumes the Federal Reserve and the European Central Bank will not be able to maintain the reduction of their balance sheets in the face of rising debt and public spending in many economies. As a result, gold protects many investors against the erosion of the currency's purchasing power, i.e. inflation, without the extreme volatility of Bitcoin. It's exactly what you're just saying. If the market discounts further monetary expansion to cover the accumulated deficits, it is normal for the investor to seek new protection with gold, which has centuries of a history as an alternative to fiduciary money and offers a low volatility hedge against currency debasement. And here, this is interesting. It says another important factor is the central bank's purchase of gold. J.P. Morgan is credited with the phrase "gold is money and everything else is credit." Like there's a saying for you. So basically, what they're talking about is just how they're having to. I'll finish this next paragraph, then I'll pass it back over to you. So it's saying that all the world's central banks include treasury bonds from countries that serve as global reserve currencies in their asset base. This allows central banks around the world to try to stabilize their currencies. When we read that a central bank buys or sells dollars or euros, it is not making transactions with physical currency, but with government bonds. Hence, as the market price of government bonds has fallen 7% between 2019 and 2024, many of these central banks are facing latent losses from a slump in the value of their assets. What is the best way to strengthen a central bank's balance sheet, thereby diversifying and reducing exposure to fiat currencies? Purchase gold. And it just continues. It's a really good article, but that goes into that. It goes into China and basically explaining why China and India are the biggest buyers as they're trying to balance out their reserves. So anyway, it's interesting that a lot of what you're saying. I mean, this is literally this article was this morning. So a lot of what you're saying is matching up exactly to what this is laying out.
Well, it is. It's their insurance policy, right? Because in times of inflation, when you're printing money, it takes more of that currency because you're devaluing it. Every time you print it, it becomes worth less, right? So it's going to take more of that currency to buy a tangible asset, whether it's real estate or gold or silver or whatever. Now, well, the interesting thing about gold is it's got zero counterparty risk. It's not like real estate, right? You can buy a tangible asset in real estate, but almost everybody on the planet has to finance it because it's expensive, right? So now you've got interest rates, you've got income, you have to qualify for loans, and those things could come crashing down to earth, even though it's a tangible asset. Gold and silver, like other things like oil, gas, whatever, you print the living daylights out of a currency and devalue it. It's going to take more of that junk currency to buy a valuable good and service. So what they're doing is they're hedging themselves, right? It's like, okay, we're printing money, devaluing it, but we're having gold that's going to rise in value because of the money printing that we're doing. So it's this offset, right? It's almost like it's the zero-sum game. They're protecting themselves against their own policies, which is the crazy thing, right? But yet they're still doing it because they know the writing is on the wall. And the thing that has caused gold and silver to go up, money creation, printing of money, fiat-based money with no tangible backing, is going the way of the dodo bird. And they're basically positioning themselves for the next chapter. And I think us as individuals, Seth, should do the same thing.
I couldn't agree more. So walk us through, if someone wants to work with you to move their assets into gold or silver, how does that work?
So you just go to goldwithseth.com or call us at 720-605-3900. Just say, heard Seth and Kirk talking about it. And you want to protect your IRAs or your just cash accounts, your brokerage accounts. We can do all of the above, but in physical metals. We're not talking about paper, ETFs, anything like that. Physical metals, bars and coins. So you give us a call. We'll get you scheduled on one of our consultants' calendars. Well, we're digging deep. We'll find out what you want to do, what your goals are, what your dreams are, what your fears are, and craft a strategy of success moving forward using tangible gold and silver, coins or bars, to hedge yourself against the crazy monetary policies that we're seeing around the globe. And that we hold your hand through it. My team is really, really good. They'll bend over backwards and make this transition easy, the burden light, to get you out of harm's way from this juggernaut of digital and paper assets into something that's real and tangible. Just have to give us a call. Take the first leap of faith, call us, then we'll dig in deep and really strategically map out how we would do something for you to protect yourself and get you out of the path of this hurricane.
Perfect. So that's goldwithseth.com or 720-605-3900. The information will be in the description below. Well, Kirk, thank you. It's always good to have these updates, and I think that they're going to get even more intense as we move on. So, thank you for being a voice of reason. It's really important.
It's my pleasure. We'll talk soon.
Man. Take care and God bless. Folks, we all see it. Everything's getting more expensive. We're paying 2, 3, 4 times what things cost us a few years ago. And we know they're lying to us. 3% inflation, really? Think about it. Why are they telling us to keep our hard earned money in the banks and stock market while they're rushing to buy gold and silver? That's right. Governments and central banks around the world are dumping the dollar and scrambling to buy up gold and silver right now. These are smart people. They see the signs just like you do. They know the crash is coming. The dollar has lost more than half its value in the last 5 years, and our national debt's increasing $1 trillion every 100 days. Folks, it can't go on like this. Even Bank of America is warning about a dollar collapse. And if they're right, it's only a matter of time before our savings, our IRAs, and our 401ks could be wiped out. Look, right now, it's easy to buy gold and silver, but in the future, it may not be. Experts are saying that prices will keep surging, and UBS says gold could even go up to $5,000 an ounce. Kirk Elliott's phone has been ringing off the hook because the folks who get it aren't wasting time. Now, I can't tell you what to do with your hard-earned money, but I can tell you that even if just some of your savings are in gold and silver, you can rest assured that money is safe. So call Kirk Elliott today and protect your wealth. It's better to be 6 months early than 1 day late. So call Kirk Elliott today at 720-605-3900 or visit goldwithseth.com. Fill out the form, set up your free wealth consultation. Again, 720-605-3900 or goldwithseth.com. Folks, you better act today.